Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts. The first one I want to look at is a euro dollar. Looking this, we can see a second bullish white soldier yesterday. It was a nice follow-on higher from the previous bullish three-day pattern stretching from last Friday to Tuesday, a bullish morning doji star pattern that utilized the springboard of the short stroke medium moving average, currently at 108.90, and punched up through the medium moving average, currently 109.55, the significant 61.8% Fibonacci line for 2020 at 109.62. Most importantly, yesterday we punched up through the long moving average, currently 110.09. The market closed above all except the long moving average so far. The long moving average is the first of two key tests for the diamond bottom pattern formed over 2020. The market needs to establish itself over this and the 50-cent Fibonacci line for 2020 at 110.64. It does, however, give the opportunity to look ahead at some possible potential targets for the diamond bottom on the upside. Initial target X around 116.75. It's a big ask, but I can only tell you what I see. A fuller potential target X1 is in the 117.25 area. There's a lot still may go wrong, but that's what it looks like right now. The next chart to look at is cable, aka sterling against the US dollar. The hesitation we'd seen last week went to a grander scale over the last 2 days as Tuesday's action punched over the short stroke medium moving average, currently 122.71, and the important March-based 50-cent Fibonacci line at 123.01. The continuation higher earlier yesterday ran straight into the March to date downtrend, currently 123.44, and backed off immediately, thus making that downtrend a three-pointer. In addition, yesterday's backing off also made a bearish army, though no follow-through lower so far today. We're seemingly stuck again around the short stroke medium moving average. Watch out for the newly formed uptrend from last week, currently at 122.04. However, we still have target X below for the recent ascending triangle in the 119.60 area. The second target is the double top target X1 in the 118.50 area. Next chart to look at is euro against sterling. Okay, we have some interesting things about to happen. Let's recap first. This week, you would drop down to the support from the big 50-cent Fibonacci line for the whole of 2020 at 88.89. Resupported, I might add, by the short stroke medium moving average, currently at 88.75. This was fine because we bounced straight back up yesterday with bullish long white Mariposa to the old target X. If we can move just a little higher, over 90 even, and close on Friday either over 89.60 or below 89.30, we'd have a weekly key reversal. It's an ask, but not impossible. Next chart to look at is the US dollar against the Indian rupee. We might, though it seems less likely with the longer the market stays between the two 50% Fibonacci lines at 75.71 and 75.96, but we still might have a weekly key reversal here. It is essential the market closes Friday outside the range 75.80 to 75.95. Difficult, but still possible. Otherwise, this market in the short term will be caught in the twin headlamps of those two 50% Fibonacci lines. Overall, even this recent action still ties in with the idea mentioned 3 weeks ago of the moves from March today being an inverted ascending scallop pattern. The final chart to look at is the US dollar against the Brazilian real. Earlier this week, the market finally reached the double top target X for the earlier pattern this month. In doing so, it sold below some significant support. So yesterday we had another significant fall with a drop and close below the late March uptrend, currently at 532.59, and the 50-cent Fibonacci line for the big mid-March to May move at 531.59. We now have perhaps the most significant line to test today, the February to date uptrend, currently at 521.29. If we have consecutive closes below that, then I can say that the whole action from even December 2019 today is a large bump and run pattern. This may actually already be the case. So in the meantime, stay safe in the markets and in real life.